pretty obvious that at this point, we're not going to have 2013 all over again.
2013 is over. 2014 is going to be about slow and steady wins the race. We're not going to see sexy kind of news articles. We're not going to see it in the press as much, no social media. It's going to be a very slow year. 2013 was the big comeback of the housing recovery. If we look at it like a marathon, we just were at the first 2 months.
So is this a relative change? I mean, compared to 2009 or 2010, 2014 is still going to be very good.
It'll still be a great year. I mean, prices will be up in most metros around the country, according to Zillow, but we're not going to see the 25, 30% and double-digit gains in most parts of the country this year.
What's a behavioral metric right now when you look at the sellers and the buyers? What's front and center for you?
You know, a lot of sellers have been in negative equity positions for so many years. I think 2 million came out of it this past year. So they're going to be not so greedy. They're going to be excited to actually get out of their home. They've been stuck in their homes for 2, 3, 4 years, had 3 kids, couldn't get out.
Right. What percentage of America's selling is underwater?
I don't know what the percentage is today. There's still millions more that need to come out from underwater and a bunch more that want to sell and can't get out.
What's the reason we slowed down? A lot of people look at the rise in mortgage rates that we have seen recently, but it hadn't been all that much.
I mean, they were small. Look, the refi market is over. I mean, the refis kind of ended in July and August. They probably closed in the late fall. A lot of buyers got spooked. In April and May, it was a crazy market. 50 offers on one home in San Francisco, 26 offers on another. People just got scared. Rates went up a small percentage point in June, and that psychologically scared everybody off. They were afraid of another bubble. And
Robert Albertson was Sandler O'Neill.
This is potentially another bubble because what's been driving the prices has been largely the abnormal low interest rates. That's a problem all the time. We're back up a third the way to where we got in trouble before. The recovery in home prices has not been followed by the recovery in starts in actual home building. So this is not an industry that's getting back together. This is simply a massive refi cycle that has to come to an end. And as you say, the steady, slow momentum from here. The price bubble does not impress me. It scares me.
Scares me. Okay, well, not just the refi cycle booming, but you also had institutional investors going in there and buying up a lot of the existing homes on the market. Does that slow down this year with mortgage rates higher? And I know that they pay in cash, but with this idea that the housing market is slowing down.
You'll see a lot fewer number of sales. To your point, there's a lot less inventory. That's the biggest problem. Low interest rates was great last year, but there's no inventory. And a lot of those guys were buying up those homes in late 2012, early 2013, so number of sales will be down. There's still buyers. People need a home to live in. Rates are still really low. Look at the 80s. My parents bought it was 12, 14%. Right, 5% end of the year wouldn't be the end of the world.
The interesting metric is home starts are still below their worst point in memorable history. It just hasn't come back. It needs to.
Well, how do you fold in all that data that we get, like housing starts due out this morning, all the other economic data that we get on housing, with what you see in the real world?
You know, I say in my book, you can see all this data and see stats. What's going on in your local economy is different. You see buyers out there that want to buy homes. There's open houses that are busier again, much busier than they were 1 year ago, 2 years ago. They're still back in the market. Buyers are more cautious today.
One last question is, what does this mean for the average person? Are they going to be able to take advantage because there's not much going on, or do they got to sit?
A lot of people are out of the market. They can't buy homes. They got hit during the credit crisis, and a lot of those folks aren't coming back into the market.
There's still a lot of negative equity.
Fascinating.
Thank you very much for being with us today, Mr. DeSimone.